this morning. Glad to have you here. I'm Spencer Grice, principal with SMBW. This is one of our series of market report webinars we've been doing. We did corporate maybe 6 weeks ago, something like that. And the idea is really we're just checking in with some of our partners. Today we're going to talk about mixed use. And we've assembled a really great panel. I'm going to let them introduce themselves here in just a minute. But we're going to talk about mixed use development, both in Richmond and the larger region a little bit. Talk about what we see in the market today and some of those market drivers, and then talk a little bit about what we see coming, and then hopefully get to some of your questions, maybe the last 15 minutes or so. And Erin reminds me that if you're on the Zoom link, to use the question link, not the chat, to ask questions, and then she'll push those things through to me, and we'll get to as much as we can. So with that, I want to give the panel just a little bit of time to introduce themselves, talk about who they are, and just at a high level, we tried to assemble today, kind of construction and development and real estate and design, so that we can talk about the topic from all those angles. So why don't we maybe just start with you, Lisa?
Sure. My name is Lisa Clark. I am an architectural designer at SMBW, and I'll be talking kind of about the design side of things when it comes to mixed use projects.
Yeah.
Yep. My name is Jeff Bunch. I'm a principal at UrbanCore Construction. We're a general contractor and a pre-construction group here in Richmond. We primarily focus 3 big groups of projects: multifamily, adaptive reuse projects, and then tenant work. And I'm just happy to be here and talk about this mixed use stuff.
John?
Hello, everyone. Yes, my background in mixed use development, commercial real estate. Highlights, I guess, would be bringing Drive Shack to the area here, several projects in Manchester, and then partnering in a company called Agriburbia out of Denver. And, we were involved with the Chickahominy Falls Agri-Hood community and like to integrate food into mixed-use developments.
And I'm Michael Henley. I'm with Hourigan. We are a development and construction group that focuses on integrated solutions with a number of our different clients, and we focus on roughly 5 core areas: healthcare, commercial, office, and corporate interiors and headquarters facilities, federal work, industrial, and we do a fair amount of multifamily and mixed use projects as well.
That's great, and I think that broad perspective is going to help us, and so I think we'll just stick with you at the moment, Michael. So I think we just wanted to get a sense from everybody of where they see the market today, the kind of work that you're doing. It's a little broad question, but what are you putting in the market? And I know, Michael, you're in a broader market than Richmond, Charlottesville, and down at the beach, but what kind of product are you putting in the market, scale, anything like that? Just give us a sense of where we are today.
Sure. So we're seeing honestly a great mix of opportunities that are out there. We feel very fortunate to be a part of a number of different projects, whether we're working for ourselves and doing our own development projects, or in many cases working with a number of different developers from across town, and even out into Charlottesville, or down into Virginia Beach, as you said. As we look out there, we're getting approached by a number of different folks and opportunities. On the mixed use front, we're seeing projects from one end of the spectrum to the other, whether it's urban or suburban. We're seeing things downtown of significant scale, people really pushing, the boundaries of traditional development. And then we're seeing a number of opportunities that are popping up in the suburban markets that are around Richmond and supporting the overall community in the greater Richmond area. If you look out there, you see Midlothian is really going crazy. We've seen a number of opportunities in that area. And, we're fortunate to be working in Innsbruck right now with a couple of other partners that are taking advantage of the UMU zoning that's out there. I think that that's something that we're seeing a lot of activity in. There are a lot of good groups that are showing interest, and a lot of property transitions that are taking place out there that we've been fortunate to be able to help with. So we feel pretty confident about some of the work that's taken place.
Yeah, the scale you guys have been working at, is it pretty broad scale, or is most of your work fall in a narrower bucket?
Yeah, I would say as it relates to scale, I mean, some of the projects are ranging from the order of magnitude of $15-20 million smaller developments to even $50 and $60 million development projects that we've been a part of. The unit mixes that we're seeing, we're seeing projects that are, as small as 100 units on the multifamily front. And then we're looking at projects that are 350 units. Anything more than that seems to, there ends up being kind of a breaking point, and it feels like, with developers that don't necessarily want to take on the absorption risk.
Jeff, on the construction side, I know you guys have been busy, at least in Scott's Addition, maybe a little bit in Manchester. What are you seeing out in your market?
Yeah, so, even through COVID, we've seen multifamily, stay really strong, especially the affordable housing piece. We do a lot of that work, and we are continuing to see strong demand there. I get, requests for pricing on that kind of thing quite a bit, and we're doing several of those projects currently. In terms of mixed use, we still are looking at quite a few things down in the like central business district, where there's still conversion from some of the row commercial into mixed use apartments with commercial on the first floor. So we've done lots of those projects over the years, and I'm continuing to look at those. They come around quite a bit. And then, we're also seeing some strong demand in Manchester for mixed use as well, where the multifamily and retail components are really the mix that we're seeing the most.
So I'm curious, we talked about this a little bit the other day, but I'm seeing certainly more out of the ground. I know y'all do a fair amount of renovation, rehab work, and have in the past. I know you just finished the food hall. Are you seeing much of that on the multifamily side still?
Yeah, so certainly in Scott's Addition, what we used to do a lot of was convert, one level warehouses into different types of mixed use. We did, where we did breweries and office and retail. And what we've seen as the new trend that we see is, these developers go in, buy a block, they want us to rip the whole thing down and go 4 stories over a podium. And we're doing a lot of that right now. And so I think the land pricing has really sort of dictated that the 1-story model is harder to make work from a development standpoint. And Michael might be able to, talk to that a little bit more, but that's what we're seeing currently, is more of a demo and build new.
You're muted, Michael.
Yep. I would say the same thing. We're seeing a ton of larger scale developments that are going in and really just kind of taking down an entire city block, or at least a half a city block, and different product types too, honestly, from one end of the spectrum to the other. I think the renter demographics that are out there that are shaping what multifamily products look like is pretty broad. If I had to put it into a category for the city of Richmond, we're seeing the millennial and Gen Z folks that are taking over projects like Jeff is talking about in Scott's Addition. They're really driving the opportunities to be near the businesses that they support. We're seeing opportunities that are coming up that are really supporting and kind of catering towards seniors and empty nesters and the folks that want to move into those types of facilities. And, we're seeing a huge demand still with everything tied to VCU and some of the universities that are here. And the city of Richmond realizes and should realize that VCU is a phenomenal asset for all of the different development that's going on around town, and really helps kind of raise the tide for everybody. The stuff that they're doing from a research and a healthcare perspective out there right now is really drawing in a lot of talent, and it's still driving the market that we're supporting.
I'm curious, John, I mean, you're as much on the land side, and I know that you're also doing a lot of stuff in more suburban districts. what's going on in your world and what kind of developments are you seeing?
Well, I'm seeing the news and agree with Michael on the Midlothian corridor. Study the 300 plan. It's interesting, the opportunity zones that go out Midlothian, and it'll be interesting to watch the growth in those areas in the Hall Street corridor as well. I think that we will see years to come affordable housing definitely coming to the surface, first-time home buyers, a shift in that direction. And we do need some more for sale product in the city area. There's definitely a demand of housing home site builders in the suburban markets. But I think we're going to see hopefully a for sale product enter the urban markets as well.
Curious, Lisa, I know you and I work together on a lot of this stuff, but on the design side, what have you been working on mostly on our multifamily? What does that look like?
I think a lot of what it looks like right now is driven by the kind of the fine line between rental rates and construction costs, where there's not much leeway, and so people are limited to using literally thin materials like hardy and things that are cheaper, just because that's how you can make a project work financially. So I think until there's a change in either construction costs or rental rates to make that gap a little bit wider, we'll still see a lot of hardy and other thin material facades. And then I guess in terms of like unit mixes and in mixed use that contains multifamily apartments, I guess in the past couple of years, I've been seeing a lot of one bedrooms and studio units, kind of smaller stuff. And I think with COVID, there's going to be a shift towards slightly bigger units, ones where you can live and work and not bump into your partner or your roommate all the time. So ones with built-in workstations and outdoor balconies and patios and that sort of thing, something that makes COVID and the time after COVID a little bit more livable at home.
I think that's a good point. Jeff, Michael, I know you're on the construction side too, but does it still feel like there's inflation in the market from COVID that we may get rid of later in the year, or is that settled itself at this point and we have the market we have from a construction cost standpoint?
Yeah, I can at least point to a couple of things that are still causing lots of problems. And one is the lumber market is just, really out of whack right now and is causing a lot of price issues with owners. And so, a lot of the wood product that we put out there, 4 stories over a podium or 3-story walk-ups anyway, either way, they're using all this wood, and that's really driving some costs. And that's a direct result of COVID. Some of the other things that we see, there's some issues with PVC. And then really the other big COVID impact has been in just delivery times, lead times for materials. So we see, things that get spec'd from overseas, are tough to rely on their lead times. And sometimes even those pricing windows, we've had some issues with windows and the pricing on windows, as well as the availability of windows. So it's been a challenge in just being able to get the materials to site sometimes versus not all of those had cost impacts. Like we didn't pay any more for windows, but we certainly had a delay in our schedule because of them. And so those things are directly related to COVID. And I do think that as the year goes on, the lumber specific one, which has probably been the most impactful from a cost perspective, will probably lessen. I think that from everything that I understand and hear, that issue is going to go away as the year goes on. Not 100% sure of that, but I think that some of the materials issues could persist throughout the year.
Yeah, second Jeff, everything Jeff is saying when it comes to all of that. The wood prices are pretty crazy. We've seen all cost escalation in the 10% range. And when it's, roughly 20% or more of your overall cost on the building, you're talking about, $2 2% price increase just on the wood framing on the overall cost of the project. So, and then, I think everybody immediately goes to COVID, but we all forget that right before COVID, we were in the middle of a trade war that has still been playing itself out. And we've all been fighting those different things from a supply chain shift perspective. And it certainly impacted most of the jobs that we've been a part of, not just the multifamily and mixed use world, but a number of the jobs that we've been fortunate enough to be involved in.
So I think Lisa's right. On the design side, we have felt the pinch between the rising prices and the rental rates and what that means for design budgets on projects. But do we see rental rates continue to rise?
Yeah, I would say that we're still seeing rental rates continue to rise. It's probably not at the uptick that the design and construction community wants to see it. And preparing for some of this, I thought about, what is DC and Northern Virginia seeing right now? When you think about the fact that Richmond is such a squeezed market in a lot of respects between the cost of construction and the rental rates that are the effective rates that we're seeing, and then you compare it to Northern Virginia and the rental rates that they're getting, I mean, they're 50+% more on the rental rates that we're getting. If you want to be in the district, they're double the rates that we're getting in the Richmond market. So we all want to see development push the envelope, and we've been able to meet the demands that have been out there, and we've consistently been able to stay on top of this without allowing rental rates to be able to go through the roof. But as Richmond continues to grow, I think there's great opportunity there, and I think that the community will ultimately surge because of it, and so will the rental rates for the demand that will likely come along with it.
Maybe to that point, talk a little bit about what's driving development in the city. Maybe starting with the idea of, someone mentioned the 300 plan, the rezonings that have gone on in the city. And I'm curious what people's thoughts are about the Pulse corridor, the TOD1 districts, the push for density along some of the corridors in the city, and even, kind of moving out into the suburbs. Do we think that is going to drive? Is that driving development? Is it having its intended effect? John?
I think so. I think if you look at the plan and look at the map, future growth, it's interesting. You really don't see much mixed use designations or areas when you look at the Southwest corridor, except for that Midlothian corridor, the opportunity zones there. It all seems to be still centered on the northwest and then the east of Richmond. So I think the span out into the suburban markets is a good opportunity on that Hall Street and Midlothian corridor.
Just thinking about it from the larger picture on the master planning effort from our side and what we think. I think the beauty of the Richmond 300 plan and what they put out was the inclusivity of the process that they went through. It's just kind of taking a step back from what actually may come from all of this, but really they went out and did a grassroots evaluation and engaged the community to develop this plan, which is really different from what has gone on in the past. And frankly, the feedback from each of the districts is driving some of the direction that this plan is supporting. And I think one of the things that you asked was, what's really driving the development? And we all know that Richmond is, largely politically tied in a lot of different ways when it comes to the different areas of development that are going to take place. So I think that what we have is an exciting opportunity, and the fact that City Council has already come together and approved this, and that plan is really being put in place at this time. It should be a welcoming mat for people to come in and say, Richmond is open for business. We are ready to go do these types of things. We want the private development community to come support many of these initiatives. And I think honestly, just personally, that's probably one of the most exciting things when you factor in all of the different ideas and concepts that came along with the Richmond 300 plan.
The one thing that has struck me of late is that, there was so much, there were a couple of pockets of development in the city that were very strong, and it feels like it is really spread out, and more of the neighborhoods have really picked up and gotten some momentum, which is great to see. And I think the plan helps support that, but they're all going to have kind of their own flavor and scale of development that will come with that. I'm curious, we're really tangentially involved in the high-speed rail project, but if that comes to fruition, do you think that unlocks something for Richmond in its connection to DC and that population that might look to come south?
I think we're already seeing it, at least from our perspective. Many of the development partners that we work with out in the community, they're recognizing it and they're seeing the opportunities from it. People are looking down south. People are moving to Richmond. Look at the expanse that's happened in Raleigh. We're catching pieces of that as well.
Mm-hmm.
And COVID has really supported a lot of the potential for people to be able to work remotely. The whole idea of digital nomads and people being able to work wherever they want and live wherever they want. I mean, there are real opportunities that I think we can capture by creating real gravities and real phenomenal development centers for people to be around. And it doesn't really matter what business is necessarily in that particular community because they can travel to where they want to go.
I could try. I mean, I know, Lisa, a lot of our focus has been around COVID and some of the design work we've been doing, at least for the last 6 months. And it's true on the corporate side as well. But talk a little bit about how that's impacted kind of a mixed use focus and design decisions we've been making.
Sure. I mean, I think, like everything else, there's a desire for a bit more space and separation between people than we've had before. And then also kind of a renewed or a new focus on the air you're breathing in. And so I think there have been and will continue to be some mechanical improvements to mixed use and multifamily type projects where, you get a little more fresh air, dedicated fresh air intake, and there's less cross contamination between units or between common spaces, just because it's top of everyone's mind. And then I think also, a trend toward a more touchless environment, automatic entry doors, maybe touchless elevators or something like that, and just generally a more health conscious, germ conscious construction type.
Spencer,
John, go ahead.
Just a quick question back to what's driving development. I had a question for John. Are you guys and Michael too? Are you guys seeing a lot of out of town investment in the city? Is Richmond really bringing that out of town investor?
Yes, I would say several of my projects are definitely using out-of-town investors and developers. The one in particular there in Manchester, Spencer, we've discussed some changes in there, looking at ways to bring in, charging stations, live walls for vegetation, more synergy around social gathering, bigger lobbies, potentially for stackable parking, integration for in the future. And that's all coming and being driven by, at least in my involvement, is from out of town investors looking for that vision in the Richmond market.
Yeah, I think the food thing, John, is interesting because we're seeing that not only on the mixed use multifamily side, but also on the corporate side. We have some kind of civic and hospitality type of projects. Talk a little bit about what that component looks like as you're integrating into developments, and people may not really understand what that means, but a close tie of fresh food to these developments.
Well, there's several ways to approach that, just from an experience of live walls within your lobbies to your rec areas to your floor area, each floor area, your elevators, having living walls that could either be for good ventilation, to flowering, to some herbs that could be picked as well. That's small scale integration of food, but it gives a good experience, a good feel in the multifamily market living. Also, the integration is through satellite farms and working co-ops into your multifamily property management programs to offer that incentive. We're starting to see the mail rooms becoming more involved, not just for your Amazon package, but for refrigeration, heating, very technically savvy access and control of the mail rooms. So I see in the future integration of food from outside farmers markets into those multifamily projects, and the alliance and the integration to help the farmer provide that service where you don't have to go out to a farmer's market, but the farmer's market's coming to that mixed use project.
So it's almost like a co-op.
It's like a co-op. Also, there's working with a fine group out of Colorado that is into sound, healing, wellness, nutrition, and using sound vibrations when you work out and things of that nature. We want to try to implement that and integrate it into the retail spaces that you see that are the requirements for multifamily construction, that it's hard to get them filled with the traditional tenants, where I think there's a need to go in and look at the wellness health centers. It supports the tenants in the building, and it provides that grounding of health. And I think we're going to see more of that in the future, not just in multifamily, but the mixed use integration of social fabric, food, entertainment types of to replace the traditional retail.
I think going back to Jeff's comment, and I guess before I say anything else, I'll say, forgive me for fidgeting over here. The sunlight is shining through the porch on me. So trying to make it work over here. But I would say that one of the main things that we're seeing out there, and we're kind of in a unique situation, right? We have a development arm and a construction arm. So we work with developers for the effort of supporting their construction activities, and maybe we're not a part of the overall development team. But in a lot of cases, we partner with developers. I mean, most of the development projects that Hourigan has done are partnership type of arrangements that we've done with other developers. Even the project that's behind me that I put on the screen here is a partnership with a development group called Riverbend in Charlottesville. So we've got some great scenarios. And I think what really is unique and exciting to us, playing off of what John is talking about, is that these out-of-town developers that we are seeing, they're bringing new and creative ideas to the table. I mean, there's been the same type of development brought to the Richmond market over and over again. And we've put different spins on it and changed things, but these guys are coming from tier 1 cities. They're coming from communities that have a lot of different concepts and different ways of thinking that they've already tested and tried and found that it attracts and retains people and encourages this type of social interaction that John was talking about. The types of developers that we're looking forward to partnering with and even finding these opportunities out there right now are really the folks that are taking the time that get to know the local history and the local culture. The food thing is huge, right? I mean, that's a main driver, but one thing that we haven't even begun to talk about in this conversation is the affordable housing components that need to come, that are really being encouraged and required by the city in a lot of ways. And not only are we trying to create opportunities for, the social connections that can be had there, but we need to create the opportunity for real social change. I think that there's real potential to be able to create inclusive communities that allow these affordable housing type of arrangements to be embedded in the overall plan that gets created. And then as that plan is created, you can really kind of put the bootstraps on and lift up, the entire community that's out there. So I think that for me, it's finding the folks that are coming in with not the perspective of trying to do a single development type project in one building, but really trying to look at how they can come up with a comprehensive approach, as John's talking about, that really creates change. I mean, that's what we're after.
I think that's right. And there's not a lot of value of someone coming and replicating what we already have, right? We do that well enough in the market that we own currently. I think that the DC, but even Charlotte, that connection is always important to us, and we are seeing more influx. I mean, we see it in our office, just in the people we're hiring. They're almost consistently out of DC, New York, Chicago. So there are people coming to town, and they bring that. I think one of the benefits of that is it brings an expectation of the market that they're bringing from those tier 1 cities in terms of rentals and mixed use and amenities and things they want to see. I know, Lisa, we haven't seen in the projects that have come to our office much affordable housing component. And I'm curious, Jeff, have you been building much of that? Have you seen much of that in your projects?
So yeah, I mean, I've pushed heavily into affordable housing, and we're building 2 projects right now that are affordable housing, and continue to try to really, just be a go-to for that market. Not only because, we're a construction company, we're going to do construction, and so that's a place to do it, but more because, look, I think there's a real need in the community for affordable housing. And so being able to facilitate that certainly gives us the feeling of contributing to the community. And so, yes, I'm seeing a lot of affordable housing. I think there's a lot of initiatives politically to really promote affordable housing and really do some innovative things to really put some units on the ground that I think weren't there before. And so I think the new administration and some of the initiatives that they're going to probably do, and things that they've already done with the 4% low-income housing tax credit that they've already done some things with to make deals more feasible. I'm looking at one right now that is a direct result of the implementation of the floor for the 4% credit, which is, there's a couple different facilities for affordable housing, but that's one of them. And so we're continuing to see more and more of that. And I think it's great. And I think it is needed, and we'll continue to do those projects as affordably as we possibly can to continue the development of that.
I'm curious, are those projects more maybe narrowly focused on affordable across the project, or are they more where affordable is integrated into more market rate, so that you literally get tiers inside of one development, which to me seems a more successful model long-term from a social standpoint, that you're integrating different tiers, different groups of people together and having that mixing as opposed to standalone kind of striation.
And, I can at least speak to a couple of pieces there, and then I think Michael can probably talk about some financing stuff that I think is helpful along the route. So the projects I'm describing are not, in the sense, mixed income. They are low income projects, but what you're describing is a program from VHDA that does some financing that has some affordable components to it, that where really you get the mix of market rate and the affordability factor, and they can do that through some aggressive financing. And I think that's a great program, and we've done some projects that have used that financing as well. And so I think there's several different buckets of work being done to promote affordable housing, financing being one of them, the LIHTC programs, both the 4% and the 9% credit. And there's also, I think there's legislation out there right now for a state affordable housing credit. So I think there's a big push to get exactly what you're describing, which is the mixed income, mixed use project, which I think everybody would say gets really good results.
Absolutely. I'm with Jeff on that. I think there's great opportunities there. He's hit the nail on the head when it comes to the financing strategies that people are putting in place. Going even back to the concepts that we were talking about earlier of just out of town developers. And there's a balance that can be created when you include the folks from the community to offer their opinions, but then when you bring in the expertise, we're not the first city to have to tackle this, right?
Mhm.
We should be learning from specialists, people that have already done this and have put this in place, and are able to share some of their experiences with us. I think that that's a recipe for success and something that we can really start to build upon.
Yes, it'll be interesting to see how the first-time homebuyer tax credits program comes into play with the mixed use as well. I think we're going to see an accelerated rate of first-time homebuyers in the market that we haven't seen in a while.
I'm curious, John, you know, the for sale product that you've been doing, I have heard that there is at least some rental, call it, you know, 2-over-2 condo or even single family going straight to rental and not being for sale. Do you have some of that mix in what you're doing as well?
Yeah, we've talked to several groups, and Michael, I think you mentioned it, working with some folks that basically do a single family product. We have seen that. We're going to see more of that in our market, in the single family rentable smaller home product that could then transform into that first time home buyer. I think you've worked with one of the folks as well that we've talked about before.
Yeah, we haven't worked with any of the single family folks that are looking to do that, but we've heard about it. We've heard about the models that they're bringing to the table, which I think is exciting and really opens up the avenues or different avenues for a number of different types of developments that could come along.
They really push the zoning. That's the rub is maneuvering that type of product and putting it into a single family zoning when it's really a multifamily use. But they're good at it. There are several companies out there that do it well. We'll see how that integrates into some of the surrounding suburbs here in the Richmond market.
All right, well, we're getting a lot of questions in here. I wanted to just spend a few minutes maybe trying to look ahead a little bit before we get to some of those questions. So we talked a little bit about, you know, where the development market's going. How do you think we are trending compared to the Charlottes and the DC? Do you think that we're in line with our growth is keeping up with those markets? I mean, I hear and read that we are in some ways ahead of certainly a lot of the tier 2 markets that are out there, that there's a little bit of gravity around Richmond right now as a city that's got a lot to attract people. So I'm just curious where you think our growth rate is, which hopefully translates into rents. You want to take that, John?
Sure. Well, you know, I think what we see is the trending in the Richmond market, definitely a foodie town. I think social fabric is very good. I think we're competing along the lines with Charlotte and Raleigh. You know, our demographics to the mountains, to the ocean, to DC, it sets us up very well for future growth. You know, just in the Richmond market alone, we saw most of the completions, majority of the completions in multifamily in 2020. There was just a huge boom of construction, and I think that's going to continue. And I think it's the lifestyle. The river brings in great momentum for parks and services. I think Richmond's done a great job with the river, and I think you're going to see that growth continue in this market. And we're definitely a competitor. Michael, I agree with you. VCU is a huge draw for us. So I think we're definitely going to surpass some of those markets.
Hey, Jeff, do you kind of looking ahead? We talked a little bit about obviously rents and construction costs, but it feels like a lot of our market at the moment is settled into this sort of 5/2 podium model. Seems to work most of the time. But do you see something new coming? Do you see room in the market for? I know we see a little bit of this precast that's going up in Manchester, but do you see something new coming on the construction side? How we put these things together?
Well, so, my take on that is it unfortunately goes back to the rents. I mean, I think if the rents are able to increase to where it makes sense to go to a little bit different type construction, go a little bit higher and use metal, I think that the rents are what really drives that. Currently, what we see is everybody wanting us to price wood products. So I do think that the rent will ultimately drive that, but I do think that the rents are going up. And so I think that there's going to be a push towards as more and more as the city gets denser and denser, and more units are put, and as long as we all believe in the trend that, the cities are going to continue to densify, even with COVID and people moving to the suburbs a little bit. I do believe that we will end up seeing higher, 10 stories and things like that where you're working with metal. And I think there's a couple other things that matter there too. The technology really to date hasn't really impacted so much the means and methods of construction. It's really just impacted the documentation, the drawings, the guys use iPads on sites and, some lasers and things like that. But the actual connections are still done the same way. You're still nailing 2x4s together. And so where I see some technological things that could be happening in the next few years is just on things like panelization, really getting that to a place where it makes a lot of sense. And really the pricing, it becomes an advantage to go to panels. Currently, right now it's a wash. You might get a little bit of extra time from doing a panelized product, but you're not going to get any major savings in cost. And so I think that there's some opportunity there. And then, different just types of construction. I know, and Michael could probably talk to this, but the project behind him is a CLT project. And, that's a really cool product. And I think that different materials and using different materials is something that, could become really a big opportunity for us in the next few years.
You're absolutely right. I mean, what we're seeing is a number of different products being tried. You talked initially about the prefab stuff and the panelization. Everyone's fighting to try and figure out how to get that secret sauce together so that it can truly be more efficient and get the cost down. I think one company that anybody could go out there and do some quick research on is Katerra. Guys from the West Coast that have taken, some really unique ideas and concepts, and then they've spent $2 billion trying to figure out how to make this work and almost sunk the company. And they just recently got a whole nother infusion of cash to be able to help keep the thing moving forward. So if they can't make it work after spending all that kind of money, I think that, a lot of us here locally are probably going to experience some of the same things. But I do believe that a company like them is going to be required to try to break the mold for a lot of this stuff. And we're, doing what we can with the technology that we see to be able to find the opportunities to step apart from the traditional wood frame construction product. So what we're talking about, the project that's behind us, it is an office building predominantly. It does have some retail on it and a parking structure underneath of it, but the CLT product is pretty amazing. It's a wood product, so it's sustainable. We're getting a lot of interest from potential tenants that want to be in it because they want to make a statement as a corporate group. I think it's, a pretty unique product type to be able to put in. And what's behind me was a picture that was taken on Friday of this past week. And then They had only started to install the CLT only, I think it was 2 weeks before this. So they're up to the third level already, and it's flying. The whole sequence of installation is going very, very quickly. So I think there's a lot of benefits that come from CLT potentially, and we're even having great conversations with the providers there that to talk about some of the multifamily uses that we could put in place for something like this to get the additional height that Jeff talked about. On top of that, I mean, you look around Richmond, there are folks that are pushing the boundaries when it comes to the utilization of precast. The challenge that everyone's running into on the precast is how to make it not look like a bomb shelter, right? So we got to find a balance between some version of architecture and trying to be able to put something together that's really, really nice and, you know, can stand apart in the community.
You know, it's, I guess, between Lisa's comment about the thinness of the cement board and the heftiness of the precast, it's the same problem on sort of the two ends of that spectrum. Lisa, you talk a little bit about, you know, some of the maybe, I know I agree, Micah, there doesn't feel like there's a revolution in housing, right? And back to your point, you're almost looking for the kind of the Tesla to upend the market and motivate the larger market to get behind a different direction. But in small ways, I know, Lisa, we're, you know, playing with some technologies and some small things in our developments, especially around parking and things like that. So you want to talk about that a little bit?
I think John had mentioned earlier that in some projects we're working with John on, we're considering doing parking with lifts involved. So it's 2 levels of parking, but you're only building, you know, a concrete podium with one story. And so I think that there's possibly some economy to that. And also, you know, it's a little bit more sustainable. It's a lot less concrete and adaptable. So say, you know, trends change and you don't need that much parking in the future. I think it's a removable piece of infrastructure or something that you could add on later if you find that you do need more parking. So I think in that sense, you know, that types of technology that are following transportation trends. I think we're also going to see maybe more electric car charging stations, some Uber and Lyft lounges that are right next to the outside, and you can watch your Uber and Lyft show up. And with that, you know, a further reduction in parking, hopefully, as people are less reliant upon their own vehicles and more reliant upon shared car services and public transportation and that sort of thing.
All right. Well, let's get to some of the questions. So I think we got about maybe 10, 15 minutes left here. And we've had a few of them. So I'm going to, since, what was the, Aaron? First question that came in actually was before the webinar even started. So I want to make sure I get to it because I know who asked it. But the question is, what advice does the panel have for developing small urban parcels less than 1 acre for commercial or residential use? And I realize maybe it's the scale of that's pretty small, but we also do, you know, we certainly talk to developers and those sites can sometimes be difficult to make work financially. So any advice you could offer?
Well, I would say that there's a particular piece of property that we've been working on. We've worked with 3 different developers to look at the same site in downtown Richmond. And every time we ran into the same problem until we figured out how to get the height really driven so that you could get the unit count up to where it needed to be. And each one had their own preferences on what they ultimately wanted to accomplish. But a great opportunity in one firm that we're working with right now that was really persistent, a great architecture firm that has been plugged in to help come up with some, you know, pretty crazy ideas and different things. And we're looking at some pretty unique structural systems to try and make it work, as Jeff talked about. And you've got to pull every lever to try and make some of these smaller sites work, particularly if you're talking about doing multifamily. And in this particular instance, you know, we're also talking about really catering towards student housing, which has a little bit better return profile on it.
Okay. There's a question about COVID related. Is there hesitation in development due to COVID? And maybe thinking about that with mixed use, Do you think that it might change the trends from rental to ownership, or from big multifamily to more 2 over 2 and more discrete development? Do you see any of that coming because of COVID?
You want to take that one, Jeff?
Well, so I have not seen any. So like the way that I would gauge that is that we've been now going for a year or so with COVID, and the demand that we've seen for construction projects has continued to it was steady and is continuing to go up. And so I don't see any massive slowdown in the projects that I'm seeing that people are asking me to give them pricing and help them with. We've probably seen some changes in the type of projects that we're seeing. We've seen less retail, food-based projects and more the multifamily projects. I don't know if that is a result of the fact that you can go and finance a multifamily project speculatively versus everybody knows right now that the food industry is having some issues. I'm not sure, but I can say that the volume of construction work currently is been maintained as far as I'm concerned.
Yeah, we've been fortunate as a company. We had a great year last year as a business. A lot of things continued forward for us. The areas that were probably more impacted for us were areas that were tied to corporate office functions. And I think that's easily understandable, as most people are, balancing the work from home lifestyle that they've all been forced to live by in some respect. So a lot of corporations have taken a step back on some of the larger projects. I think, one of the things that a lot of people want to see, and that I hear from a lot of different architects, developers, people that are thinking about what could be most beneficial for different sites that are around town, is how do you blend that office into the multifamily project and make it a true mixed use, not with retail, office, some version of housing, maybe a hotel, some other elements that are going to blend the overall development. And to Jeff's point, it's really challenging to get those things financed right now. You need to have a pre-lease in place for any of the office functions. And I don't know of many folks that are out there doing new leases at this point, unless they're just busting at the seams. But a lot of the folks that had larger projects that were moving forward, none of them have really stopped. We've been able to keep things really, really moving. And looking into 2021, we expect to have the same thing. On the multifamily front, we're north of 80, probably closer to $100 million worth of construction activity that we'll put in place in 2021 on the multifamily front.
I'm curious, talking about true mixed use. I know, Lisa, we've had conversations with partners about integrating things like Airbnb suites or more short-term stay into larger developments. Are you guys seeing that in any of your projects, and even almost discrete hotel components, or talk about digital nomad, 1 month, 2 month lease kind of arrangements, maybe fully furnished suites? Seeing much of that? Any of that?
I can just say that in general, I haven't seen any of that recently. I will say that I did see some of that before COVID, but I think the hotel industry, just the hospitality industry, has gotten hit so hard that I don't think those projects are easily financed right now. And so, I think that the developers that I'm working with, they're not currently looking at doing those projects.
Okay. We've got this is a good one. Have you had much interaction with VDOT and their super street concept for R cuts and U-turns for primary roads? Who wants that?
I have not.
I'm not a heavy civil guy. I'm not. No, I have not.
All right. Well, I haven't either, so we're not going to be helpful.
I will say though, Richmond is known for its one-way streets. It's great infrastructure compared to other cities that looked at, and the traffic patterns in Richmond when you have 4 or 5 streets with no left turn signs, it kind of questions, BDOT's thoughts and how they came up with the pattern and rationale for all the one-way streets.
Yeah, it does. We do feel like a lot of our projects were sometimes fighting infrastructure and decisions made 30, 40 years ago that you're trying to unwind now. There's a question here about new administration in the federal government and maybe a re-engagement on the issue of climate change. It's a pretty broad question about will that trickle down to mixed-use developments, but maybe another way to think about it is is there a stronger play for sustainability in these developments than maybe there was a couple of years ago?
I'd be happy to take that one. And I would, again, point at the building that's behind us, but we're doing a number of projects that are considering sustainable elements. It's a key part of, our initiative as a construction and development company. We feel like we need to, consider that as just a normal course of business and every opportunity that we possibly can. I mean, obviously the economics come into play on any of these things, but this is a market-driven project that's behind us. It's for a tenant that really cares about this and has a great mission, and they made it a critical part of the overall development. And as a matter of fact, when we got plugged in on the project, they told us everything is on the table to evaluate on this job except for the cross-laminated timber. Like, we've got to do the cross-laminated timber. Getting a firm like ours plugged in, being able to work through the details on all the different things, we were actually able to make this one work and be able to bring it to market. People are doing it down in Charlotte right now. If you look out there and on the West Coast and Portland area, Washington State, CLT is huge and it's coming. And I think it's gonna be a major driver, and we're happy and excited to be on the forefront of that.
Anybody else seeing sustainability as a renewed focus in this particular market? We certainly see in corporate and higher ed, but in this market?
There's a component of it in the affordable housing world, especially when these projects are funded through the competitive 9% federally funded credit. There's a big, piece that's, you got to maintain these earthcraft standards, and there's really a push to score well on these sheets and really do the things that matter from an insulation and just the exterior envelope and some of the other sustainable things from power in terms of the ratings on the HVAC units and the lighting and the LED lighting. And so there's definitely even in a product that you're trying to put out there affordably, there is definitely still this component of trying to be cognizant of what the environment, what is going to be the environmental impact of this building.
All right. Well, I sent everybody a note last night. I thought I would wrap this up. As designers, we always like to look ahead and get excited about things we think are coming, opportunities we think are coming. It could be new technologies. It what animates us, I think, and gets us excited about projects. So I thought I'd close today and just give everybody a chance, forgetting rent caps and interest rates and the squeeze of where the market may be. If you could think about the mixed use market, what would you love to see come into our market? And it could be anything. I mean, it could be technology. It could be an amenity. I'm just curious, what do you think would be beneficial that would be exciting for Richmond to absorb in this market? And I guess I'll start with you, Lisa.
I think a couple of things. I think you guys all touched on it earlier, but right now, I think a lot of the mixed use development in Richmond is very narrowly focused on a specific demographic. And I think broadening that to, low income housing and normal income housing, in addition to just, all different types of people. So you could have empty nesters living next to recent college graduates living in these bigger developments that kind of cater to a cross section of Richmond that is actually representative of the population. I think there's a lot of societal good that can come out of people of all walks of life living in the same neighborhood and sharing the same grocery stores and going to the same schools and that sort of thing. And then secondly, I think sustainability, which we've all touched on, and I think implementing, new sustainable technologies and following general sustainable design guidelines are all great, but also designing a product that you think can stand the test of time, that's meant to be adaptable. And so as housing trends change, the building can be adapted and can last longer than, 20 or 30 years and still look good 20, 30 years from now, and not like it's got a timestamp on it that says this was built in 2021 and it's really dated.
I think that's an interesting point. Lisa and I had this conversation last night, and I started thinking about, if much of what we're building today, were built 200 years ago, I don't know that we would have a tax credit program, because I just don't know that it would have lasted like these old brick buildings have lasted, in that infrastructure that we built. So it's interesting to think about it in terms of durability and longevity of what we're building. Jeff, what would you love to see?
So what I think would be awesome, not only just for the city of Richmond, but I guess in general, my vision would be is that the whole baseball stadium and the whole surrounding area, I would love to see that really turned into a true mixed use live, work, play, where, there's all the different types of mixed use there that are done in an environmentally friendly way. I think that would be just a real big deal for Richmond. I think it'd be something to point to. And I would just, you asked about a wish list. That's what I would think would be awesome to have done.
All right, I agree. And I ask everybody about the ball stadium. We have no connection to that or a role in that, but it seems the most invisible pending project. And I'm just always curious, someone who can tell me that is around the corner finally. So I agree. It will be great to see that come up. John, what about you?
I agree with Jeff. I think the Diamond area would be incredible to see, a true mixed use development. They're rarely achieved to be full spectrum mixed use. And I agree with Lisa that the diversification and sustainability is achievable as long as we as a community think out of the box where those needs are, where we're going with it. Food integration is huge. Health, wellness, social interaction, all that could be achieved there in that diamond location. So, Jeff, thumbs up to that.
All right. Well, Michael, I'll give you the last hope.
I don't know that I would say much different other than the rest of the group. But I would say that, as we look back over the last probably 10 years in Richmond, I would say that we've all learned a lot of things that we could do differently, probably things that we have learned about how we could put together good development projects. And I would say that both sides have learned, both public and private side. I mean, everybody's taken something away over the last several years of conversations that have taken place and just the perspectives that we've all gained. What I'd really like to see, regardless of whether or not it's the, Arthur Ashe Boulevard development or, downtown or whatever it might be, I'd really like to see something that's truly inclusive. I know that we keep coming back to that. I think that there's opportunity out there to really be able to lift people up, bring them into the fold, have them be a part of an overall development plan and scheme. And, if you look around the country at the large developments that have taken place, to be able to do something like what Jeff and John talked about on here, you got to have everybody get behind it. It's got to be a rallying cry. Everybody's got to be pumped up about it. They got to be thinking that this is something that we're going to be really proud of once we get it done. And then frankly, everyone needs to realize that there's an opportunity for this to be an asset that pays back long term for the city. And I think those are the types of things that we've got to get people thinking about so that we get out of the, individual project mentality and take on, something that's really much larger than any individual or any one company.
Well, I mean, I guess is maybe a theme for the day. Development can be a vehicle for social change, right? If you think about it the right way. So, well, with that, we're actually a little long on time, so I hope people stuck with us. Sorry, we ran a little bit long. I'd like to thank everyone who joined me here today. I mean, it was a great discussion. I appreciate all you're doing out in the community with the work you're doing and the thoughts you brought today. So I think we're probably going to post this. Everyone who signed up can get a recording of the webinar. And I think that the panelists are on there and their contact info. And so I think, if you feel like reaching out to them and you've got other questions, please feel free to do that. And we will see you at the next one. So thanks, everybody.
Thank you. Appreciate it.
Thank you.
Thank you.